following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 30th. Excuse me. Wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow traded up 67 points. S&P's up 2. NASDAQ Composite down 35. DAX closed up 19. The Russell 2000 down 3 points. Gold's off 16. Light sweet crude up nearly $4, trading out at $49.20. Natural gas up just slightly. To the downside, you've got, what do you got? Priceline is off 13. Google's off 11. AutoZone is down 10. To the upside, we've got Pioneer Natural Resources. That's up $15. William Clayton Energy up 17. Concho Resources up 14. And let's go to our first caller. Let's go to Garo in California. Garo, thanks for calling. Thanks for holding. How was your Thanksgiving?
Very good. Thank you. How about yours?
Mine was very, very good. Probably ate a little bit too much. So today, officially back on the good eating program. That means no more pie.
That's good. No, I'm not. I don't eat the meat or animal food. It's a long time. So I just watch how people eat. So, but I don't eat no food. No meat.
Okay, so no meat, no fish, no any kind of animal.
No. There's a little bit of fish once in a while.
Okay.
Once in a while, because when I was up in Alaska, when I was young, I was in 20s. I worked at the Alaskan pipeline, and then I was catching my own fish. And then I was eating one fish raw a day. And so I'm used to fish, but no other meat like red meat or turkey meat or chicken or none of the above. Yeah, once in a while I eat it. Yeah.
Yeah, and how long have you been doing that, Garo?
Oh, I'm 7 years old. I started at age 35, 40, so now it's almost 30 years, over 30 years. Yeah.
Oh. So you must be a lean, mean fighting machine.
No, I do lots of weightlifting. I'm not. I'm lean. I'm good for my age. I'm 70. I run hour and a half a day. Every other day. The other days I do weightlifting up to 100, 110 pounds, not more than that, because the doctor didn't allow me after to go any heavier than 110 pounds. Yeah.
Oh, that really sounds great. You know, I have watched a number of documentaries, and we'll get to the stock here in a moment, but I've watched a number of documentaries that talk about a eating lifestyle like that. You know, and so I debate going back and forth. You know, so it's always interesting for me to speak to somebody that's actually living that eating lifestyle out there. So in any event, let's go take a look at so I applaud you for that. That takes a lot of discipline.
Yes, sir. Yes, sir. Regarding oil, that UWTI.
Yes.
If you bring that 5 minutes, I'm sorry, not 5 minute time frequency.
Yeah, okay.
And if you bring that MACD, or only MACD or stochastic or both together, but I'm concerned about the MACD.
Okay. So we're switching up. We're switching up your normal stuff. But give me a moment here. I'm going to go ahead and add that to the system. So just give me a second to add that study. Now, in the MACD, are you using just the normal default settings out there, 12 and 26?
Yes, sir. Yes,
okay.
sir.
So I've got a 5-minute chart up on our screen. We've got the MACD, so we can see it had a crossover out there. I can see your.
Bravo.
Yeah, I see your parabolic SAR dots out here.
Yes.
All right, so tell me what you're looking at, how I can help you.
Okay, you see the MACD rolled over. If you bring that line, the time was 10:40.
Yes,
at 10:40. Yeah, it rolled over. The price is going at that time. The price was approximately 21.70.
Sure.
Okay, from 21.70 now is 22.52. Okay, but the MACD is keep going down. The price is going up. What does that mean?
Well, what are you doing from a trading standpoint? What have you done? What have you done so far, if anything?
So far, I went long on that. I bought it at 21.75, and still I have it, and I may sell it very soon. I bought 2,000 shares, and I may sell it. I want to get out of it because I don't like that formation. When the price goes up and the MACD goes down, that movement, it tells me something. And I don't know what does that mean. Why the price has to go up while the MACD is going down?
Well, I mean, the MACD is a tool and it's an indicator. And so I'm going to just, to better answer your question with regard to, hey, what is it doing out here? And let me see. This is trading right now at about 22.52. And what I like to do with regard to the utilization of the MACD tool is instead take a look at, because you can use that tool to identify the difference really between two moving averages. What I like to do is I like to use the 19 and the 39. But I'm going to go ahead on this chart here, the 5-minute chart. I'm going to change this for you to the 12 and 26. So just got to give me a moment to do that out here. Oh, boy. Yeah, I don't have that on this actual chart out here, so that's a bummer. But I tell you what, we're going to be coming up to a break in just a few moments. So can you hold on through the break, and then I'll get this chart all set up, and I will give you my take on what the technical indicators are communicating to you and I, just some levels for you to be watching. So, but right now you're still long this position?
Yes, but I'm going to come out of it soon. But
okay.
Before I come out, I want to make, because because of the news is going up, and I
Sure.
don't believe on those news that comes from Arab country. They say something now, in the evening is something else. In the morning, tomorrow morning is completely different story.
Yes, and I know that. So look, we're going to go to a break. When we come back, we're going to go back out to we're going to come back out to Garo and try to finish up what the UWTI is doing on a 5-minute basis.
Yes, sir.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Garo in California. We're taking a look at the ticker symbol UWTI. That is the three-time velocity shares being long crude oil, which, as we know, had a big bounce. As Garo said, it is based upon the news, no longer rumor, but the news that the OPEC nations have agreed to some oil cuts out there. And as Garo has said, he believes that that story will change, maybe even this evening, and again in the morning out here. So let's look at it from a technical perspective as opposed to the news aspect, okay?
Yes.
All right. So the first thing that because we know that this is trading off of light sweet crude, I just simply want to switch over to the current contract for light sweet crude and see what it's doing, which is trading right now at 49.22. Now, we've had one heck of a nice move out here. Now, even though I know that you are more of an intraday trader and you've pretty much said what it is that you want to do, there's others that are listening in that trade on different time frames, and they may want to stay in the trade. So I want to also be able to give them parameters that they should observe and take a look at. And the first parameter would be the first price point level would be the area of 49.78. Now, at 49.78, that should be some resistance inside of light sweet crude. We're trading at 49.23. So, Garo, if there's any one thing that this would say to me is your action to go ahead and close this out at some point in time over the next couple of hours would make sense to me, because price should get up to that area and, in fact, may begin to back off. Now, the reason I use that is the level where both buyers and sellers on a longer-term basis are comfortable with price, what's referred to as a market profile point of control out there. It's not that price can't get above that level, but you're in the trade from an intraday perspective, and this daily chart is telling us that there is a resistance overhead level. It's kind of a, it's not a major. The major price resistance level would be 52.14. So for those that want to stay in the trade, what you would be looking for is probably to exit this, because this has been trading in a range of between about $42 and $52, or 44 and 52, somewhere in those ranges out there. So now we have a nice wide-ranging bar. Markets typically do not end on wide-ranging bars like we have today. That says that price could, continue to move up a bit here to the 49.78 area. If price is able to take out 49.78, and then 52.14, would be the number. Now, in the case of you, Garo, and take a look at a 5-minute chart out here, one of the things that I like to take a look at in a heartbeat is the price oscillator, which is the difference between two moving averages. Is it rising or is it falling? Because it just tells, those two moving averages in this case here on this chart are the 12 and the 26 period moving averages. Those are the ones that were popularized by Gerald Appel and his brother out there. The ones that I like to use are the 19 and the 39. Doesn't really matter which ones you use. In this case here, I want to go to the 12 and 26. Now, when price is above, and this is an intraday chart, when price is above that level, now in my case here, it's a red line, that tells us that the price oscillator is moving higher. That's a bullish sign. When price starts to get below that level, that starts to tell us that the hair on the back of our neck should start standing up, much like it is in yours. When you took a look at that crossover of the MACD, just take a look at the MACD line out there, you said something is not right. And that is really the same type of signal that you're getting here. Now, on a 5-minute chart, the real signal, and price can do, different things than our indicators tell us. If we combine this with our TAS market profiles, the 5-minute, let me come back to this chart out here. Everything is actually okay until you get it closed below 22.28. I don't know if you want to give up that 30 cents out there. But as long as price stays above 22.28, then that says that this can even continue trading higher out here. So your 5-minute profile is between 22.28 and 22.55. You're really right up at that 22.55 level, so you are up at some resistance out here. Now, according to my system, utilizing your parabolic SARs out here, you would be long this until 21.95 out here. So those are the calculations that I see. So I see the MACD divergence that you are looking at out here. That does also suggest to me that there could be troubles, but the real trouble doesn't start until we see a price move below 22.28 out here in UWTI, and that's also based on a 5-minute time frame chart. How is that?
Yes. Yes, that is true. If you bring that daily chart, if you bring the daily chart on UWTI, the 3 months or 6 months, you'll see that the candle is right next to that 50-day simple moving average. That value is $22.83. Yeah, if that crosses that 22.83, for sure it's going to go up to the next one is 200-day, is $25.47. But to cross that yellow line, I have the yellow line as a 50-day moving average, it's
sure.
very, very, very difficult because the candle is far away from 5-day moving average. Either the candle has to linger there until the 5-day come and reaches and touches the candle, or the candle has to come down and hit the 5-day, which is $20.20.
Right,
you see,
right.
Otherwise, that price will not go up there. Even if it goes up momentarily, it goes up, and immediately it will come down like a rock.
Sure. Well, and I see all of that. And so, folks, if just so for those of you watching on Tiger TV, Garo mentioned the 200-day moving average. On my screen, you're looking at the green line. It happens to be priced on my screen at 25.35. He mentioned the 50-day, which is at 22.83. We're actually trading right now at 22.59. But the intraday high has been 22.73. So he's identified that as a resistance level. And then the 5-day that he's taking a look at, or 5 period, in this case it's 5-day, is $20.29. So it really ushers in the same message to us, Garo, that really, because this is going to trade off of light sweet crude. And so, but typically you don't see a wide-ranging bar like today. And you typically don't see it automatically reverse. Now, look, granted, if there is some type of rumor or piece of news that comes out there, from the Arab Peninsula, then you bet. But technically speaking, what this is communicating to you and I is that price is not just simply going to fall off like a rock. That we're going to see it either move sideways to higher, and that higher would be 49.78, and above that in light sweet crude, 52.14 out here. So we know that this has really been in a trading range. I don't see that changing here just yet. But that's my current take.
Yes, absolutely. I'm going to come out at a high of the day, which is 22.73. and I'm not going to take chances on that 10 cents to go to 22.83, because on 22, if I come at 22.73, I bought it at 21.70, so I can make $1.03 on 2,000 shares. That's going to be 2,060. So that is enough. I mean, I will get out. But at that 50-day moving average, something is going to happen, and it's not going to be very fast.
Well, the last time that we dealt with a move up into that 50-day moving average for you was back on September 28th. And today's wide-ranging bar is actually greater than that one. So we'll pay attention to this. I'll look at this tomorrow as well. So we're going into a hard break. Hey, Garo, thanks so much for calling.
Very good. Thank you.
Always great to hear from you. Have a great day, and congrats on the trade out there. That was Garo in California. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 69, S&P is up 3. Let's take a couple of questions that have come in by email. Then we'll go to the general markets, what we ought to be looking at for the rest of the day out here to try to navigate what these markets are trying to communicate to us. So the first is going to be for Don. He wants us to take a look at the CRC, California Resources Corp out here. And I believe that, Don, you're looking at this long email. Thank you very much for all the detail. Maybe looking at this for more of a longer-term trade out here. if I understand the first read of that email correctly. Now, this is CRC. We're looking at a weekly chart out here. And what we can see, this thing has gone from a price of $100 or so all the way down. This weekly chart back in February of this year got down to a low of about 281. So this thing has been a whopper to the downside out there. And what Don is doing is a little bottom fishing here, trying to identify, what is this doing? Now, we can see that this did have a nice sign of strength back in February 2016. Wide-ranging bar. 14 million shares at that time, which was a pretty decent volume out here. And then we had a little bit of a pullback. Looks like about 0.618 retracement back into March 28th, about 11 million shares. So 11 million going into 14. So lighter volume. Then we had another pullback, in essence, to test that 11 million share week from March in 2016 with 19 million shares. A little bit heavier volume, but still nothing really too much. Then a sign of strength the next week. 25 million shares. This week we're seeing what could be another sign of strength to the upside. Here's what we know, Don, and take a look at this weekly chart. This area here in the 8-ish range, $8.80, $9, somewhere right around there. That seems to be a fairly decent level of support out here. This stock has not done too much to the upside, I think, as even you have pointed out in your email out here. But if you're looking to get into this thing, because it really hasn't done a whole heck of a lot, buy this on some type of pullback. Now, this week it's been down to $11. Let's take a look at what this has done on a daily basis out here. And a couple days ago, yesterday, as a matter of fact, this thing gapped lower with about 3.8 million shares. Today, this thing is gapped higher, creating, in essence, what you would call an island bottom out here. So in addition to those signs of strength, such as on a daily basis, 12 million shares back on August 8th, that's a nice sign of strength out here. This candle session on September 1st pulls back to the breakout area with 2.3 million shares. That is a classic timing the trade, wait to buy the retracement, because this comes all the way back, because this thing had gapped up with the low of 962 on August 8th, gets down to a low of 961. I'm not making this stuff up, folks. Gets to 961, 1 penny on 2.3 million shares. 2.3 million shares going against 12.2 million shares. Are you kidding me? This would be a classic in the textbook. You could highlight it and say that was the trigger to go ahead and get into this stock if you were trying to get in. Now, what you've gotten is, you got a nice little, another bullish sign here today with this gap to the upside. Now, this is another little breakout. Be patient. Wait to see if this thing can pull back to that breakout, today's breakout area, as an example, which in essence is going to be the low of yesterday, $13. You're trading at $15.76 right now. If I just simply turn on the market profiles for you, this says that, look, this thing could easily head up to $18.86 before that takes place, because you're moving into a little shooting star, a candle session from back on November 21st that had 3 million shares, and you're trading into it with 6.7 million shares so far. So this says more likely than not, Don, that it's at least going to go test the high of November 21st, which is 17.18, and can easily get up and test that 18.86 area. But wait for a pullback. This thing isn't doing a whole heck of a lot. Nice little trading range on a $10 stock out here, and that's what's going on as I see it. My eyes take a look at the CRC. Now let's go take a look at the markets, and we'll go back to. I see you've got questions about nuggets, so I can cover that here during the during our review of what the markets are doing as we take a look at gold and bonds and everything else out here. Now the key to the market, if we take a look at this little divergence, you've got the Nasdaq Composite trading down 33.50. You've got the Dow up $73 out here, and the S&P not really doing a whole heck of a lot, trading up $3. So you also have the Russell 2000 down 3 points. The key on an intraday chart comes from the NQ out here. The reason why I say the NQ is, a couple days ago, we took a look at one of our Tom DeMark setups. That's a 9 consecutive counts, either to the upside or to the downside, where in this case here, it's to the downside that we're looking at, where the close of one bar is less than the close 4 bars prior. And when you get to a 9 count out here, which is what took place at 12:30, you got our 9 count. That often can be the sign of where you would see the market pause or reverse. So that says that the low that is in right now of the day, that low of 48.22 is an important low to pay attention to. So we have seen the market bounce off of that nice little bullish engulfing candle that formed here at 1 o'clock. The real resistance on this level, we're not going to use our TAS market profiles. Instead, we're going to go ahead and use our oscillator unchanged line. That's that red line. And right now, that's priced at 48.44. So we've seen a pause in the market with regard to the NQ. Can the NQ go ahead and tank everything and pull it lower? Well, yes, it can. Can I find a TD setup account? A TD setup count on any of the other 30-minute charts, such as the ES, the TF, the Russell, or the YM? And the answer is no, I cannot. So it's really with regard to taking a look at that as an indicator, we want to pay attention to the NQ. So it has given us a potential bottoming signal. So that's the first element. Now I'm really looking at this intraday out here. What else do we know about the NQ? Well, as I switch over and I take a look at where is this trading with regard to its apogee pivot point, it is below it. That being the 48.64 level out here. That message is one of not good, not positive, more like further pullback that would be in place out here. Again, there's a divergence here between the Dow and the NQ. So what do I do to go take a look at what's going on inside the Dow and see if that move is real? Not that it's, of course, it's real. It's moved higher. But if I take a look at the Dow, what I see here is the advanced decline oscillator reading. What DeGaro was talking about was a divergence with regard to taking a look at the MACD, two moving averages. I don't know if his setting was on a simple moving average, which is what Gerald Appel was using when he originated that MACD tool. I suggest taking a look at the exponential moving average, at least in generating that price oscillator, the difference between two moving averages, a fast and a slower one out there. So 1226, 1939, use whichever ones you want that are going to work well for you. In the case of the Dow, I'm looking at this bottom panel here where I take a look at the advanced decline oscillator reading. It's nearing zero out here. It is actually moving lower, and we've had price moving higher. What do I mean by that? Let me just go ahead and paint that in. Let's go ahead and make this yellow, right? Where's the yellow? I got a yellow air. I don't want that. I'll just use a red line. So here I've got price moving higher. We've seen that. And I have this oscillator reading moving lower. Now, it's still above zero. So it is still the bulls that are in control. You didn't need me to tell you that, did you? Well, sort of you did. Because if this dips below zero, it tells us that it might be the bears that are in control. So we have a diverging pattern, much like Garo saw. And take a look at UWTI and the MACD. I'm seeing this is not normal. Doesn't mean that it falls apart tomorrow. Doesn't falls apart this afternoon. It's just not the normal behavior that you want to see with prices moving higher. Steve Rhodes with TFNN. We'll be right back. And we'll take a look at the VIX index.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up about 66 points, 64 points. S&P is up a couple. Let's go to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing great, Steve. How are you?
Excellent. Now, hey, I meant to mention to you yesterday. You said your son loves cooking, and I've watched a number of different great documentaries. That I've been able to find through DirecTV and so forth. There's one about a restaurant, supposedly for a number of years was the best restaurant in the world, located in Denmark. Are you familiar with that restaurant or the story behind it?
I can't say I am. He might be, but I'm not.
Yeah, pretty cool. It's called Noma, I think it is, or something like that. I'd have to do a quick Google search on that. That's a good one. Just the other night, I had taped this, of course. It was I don't know if you or he or your family watch Anthony Bourdain every now and then, but he did a segment, it might have been an hour segment or so forth, with Masa, who is, he operates a 3-star Michelin chef Japanese restaurant in New York, and he went back to his hometown, and Bourdain went with him. That's a great little. I'm sure there's a replay on that. But the difference, and you were talking about making a quality pumpkin pie out there, and that's really what Masa's story is all about. Just using these quality ingredients to get these amazing flavors out there. So, anyways, I just wanted to pass that on to you. But I know you called about Noble Corp out here. So tell us what you're doing with Noble Corp, how I can help you.
I was fortunate enough to buy this yesterday, and it really wasn't based on what was going to happen with the OPEC meeting. I watched this stock quite a bit, and I was already in RIG, which I've talked to you about, and I've been in the stock before, and it had a 50% retracement yesterday, and I bought it at $525. And obviously it's up today, and my question was, it looks like it's going to have plenty of volume to surpass that 604, that swing point. It just, the one just right there to the left, the little, that candle, green candle there. That little high put in.
Yeah. This one right here, giving you really a confirmed A to B equals CD would be one of the ways that you could take a look at it.
That's kind of what I thought, and I think that calculates to. I know it's 445 to 604. I did them. I think it was like about $1.60 or something. So then $1.60 off of 520. I think it was a low yesterday, and that would give at least a 1-to-1 is up around I don't know, 690 or something.
Yeah. So here's my take on this. So first, congrats on the trade out there. So you've made some nice money. I don't know where you bought it in, but in the $5-ish area, trading right now it looks like at about 631. Should make its way up to 604 or 647, I should say. So 647 is going to be its next level of resistance. Now, if we were not paying attention to the left-hand side of this chart, if we were just going to use current information to take a look at price projections, there's no question that what Brent identified for us, folks, is what we would like to refer to as a confirmed A to B equals CD up pattern. However, we have to realize that the B point that we're using here is November 23rd. And my recollection is that November 24th was Thanksgiving. So the volume pattern that we have on November 23rd out here, Brent, of 9 million shares, probably isn't a real great gauge of what the real volume was on that trading day. I don't know how we actually figure that out since it was a full trading day, but you might not have traded all day. You might have cut out earlier like many of us. So I don't know how we use that as a gauge from a volume aspect. What we can say, though, is that today's candle is a wide-ranging bar with volume coming off of the potential C point out here. And whenever you see that, that would then say to me, just taking a look at that C to D leg, that price would not just move up to the 1-to-1 price objective of 679, but more likely one of those expansion levels. Could be the 1.272, the 1.618. Those are prices of around 722 and 777. The only problem that you have to be watching for, and you've traded this stock here, is that it's trading up into the September 29th swing point, and it is doing that with light volume. That swing point had 20 million shares, and today you're at 13. It doesn't look like to me that you're going to end up with 20 million shares. So, watch that high. You're trading into that swing point. Should go test that level. That high is 670, which means, and you've got a TAS market profile at 647. That 647 to 670 area is probably where you need to make some type of trading decision out here. So, but if you can clear that 670, 722, 777, 830 or so is what seems to be written on this as we speak today, here at about 15 minutes to 2.
Okay, that's great, Steve. I appreciate it. I didn't want to take too much of your time. I just talked to you yesterday.
No. Oh, that's okay.
I do appreciate it.
Yeah, no, that's okay. The other positive is that this candle session right here, I won't show it, this little doji candle session out here on November 22nd, that happened to be one of these Tom DeMark 9-count setups, and you've now taken that out. That's another bullish sign, that this wants to move higher out here. So, congrats on the trade, and I want to see this thing clear the next resistance zones for you so that you can take this up to where it looks like you might pull the one-arm bandit at 777.
That'd be great. All right, you take care, Steve. I appreciate it. You have a great day. Take care.
You too. That was Brent in Martinez, California. And, yeah, those are great movies. Oh, great. There's let me see. Is it Noma? Maybe I didn't see I have anybody in the den there. I can do a quick search on it. I think it's called Noma. Really interesting story out here. I know you can find it. Is it Noma restaurant? Yeah, Restaurant Noma. It's got to be. I think that's the name of it. How else could I remember that? Yeah. Oh, that's a 2 Michelin star. Yeah. And so you can find the documentary on that. Now that's a restaurant where, this guy goes out into every part of the universe to pull out these great ingredients for his products out there. And then they ran into a issue where after years, you had a period of time where people got sick. I don't remember what exactly, kind of like a Chipotle deal out here. However, the stories are like this, right? It's always a great story. You got somebody who starts from nothing, makes it all the way to the top of the mountain, then falls from the top of the mountain. And this restaurant here in Noma and that chef absolutely fell from the top of that mountain out there, from where you couldn't get in to where, they couldn't fill up the restaurant out there, and restaurants, it's probably the most difficult business on the planet, I would say, because and that's a perfect example. There's the best restaurant in the world, and most times consumers won't give you a second chance. Hey, let's go to a Mike in Denver. He doesn't want to talk about restaurants. He wants to talk about the UNG. Mike, thanks for calling. Thanks for holding. How are you doing today?
I'm doing good. How are you doing?
Excellent. And so are you in this little rocket ship?
Yeah, I got into it on the 9th when I saw some strength coming in, like at $7.25. But I keep noticing it's like gapping up, but not really shooting up, you know. And it looks like it's got resistance right there about 850. And I was just wondering what you were thinking about with all of this volume pumping in all of a sudden.
Well, you know, we have to really pay attention to what's going on inside of the underlying instrument. So in this case here, it looks like it is the February futures contract. So would you be kind enough to hold on through this breakout here?
Sure.
And then we'll go take a look at UNG. We'll go take a look at the current natural gas futures contract, see where that's trading, and try to give you some price objectives. All right, that's Mike in Denver. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're going back out to Denver to speak with Mike and take a look at the UNG. So, Mike, the first thing that I'm taking a look at is the current trading contract here for natural gas, the February 2017 contract. And this has had a nice run. As I take a look at, I like to try to identify and see if there's any pattern out here that would help us determine, where prices are going to head to next. There is a potential that we could call a lightning bolt pattern, that A to B equals CD pattern. It would look like this. I don't know if you're watching this on TigerTV. If not, I'll describe it to you. But if you are you watching on TigerTV?
Yes, I am.
Oh, okay. So in essence, it's made the 1 to 2 A to B equals CD level. That price spike level would be about 341. Yesterday, it got up to a high of 339 out there. Now, that alone doesn't mean that it's time for it to reverse. You really need to see a signal, which would be a bearish reversal signal. Now, that candle yesterday was not a bearish reversal signal. We haven't seen a bearish candle since this thing has why isn't this thing working? There we go. Since it has really come up off of the bottom out here on November 18th. There's no TAS market profile, horizontal level of resistance, that you and I can look at that says that price ought to stop here. And therefore, since price is trading above the 0.618 retracement level from its most recent high, which I'm going from October 18th down to the low out here on November the 9th, this suggests to us that price should make it to the next level. The next level would be $3.48. Therefore, if I go take a look at UNG, and UNG may not have the exact same particulars out here, but let's take a look at its retracement levels to give you what that price target would be. See, it really isn't going to. Notice how I'm going to turn off these market profiles because really to me, they're not as important on the ETF as they are at taking a look at the actual futures contract. But see, from its high to its low, this would tell us that it hasn't even made it to the 0.618 retracement of 857. I think it's more important, I don't know if you've got access to it, but it's more important to gauge your decision-making on what UNG is doing by taking a look at those underlying futures contracts out here. So right now the trade looks good to me based on doing just what you and I did out there.
Okay.
Does that help you, or?
Yeah, I just kind of noticed all that unusual volume that's been popping in. I didn't know if those were hedge funds, window dressing, or maybe they're trying to get out, or maybe they're trying to get in.
I wish I had the noggin to be able to tell you that, or some tool to be able to tell us that, and I just don't. But so instead, what I'll go with are, hey, there's a pattern in place where the current contract is made a 1 to 2 A to B equals CD to the upside. Now, oftentimes in looking at the art of timing the trade, that'll tell us that when you make that type of extension, the market wants to do something else. Well, that something else doesn't have to mean a pullback or a retracement. Could just mean moving sideways out here. Until you receive some type of bearish reversal signal, it says you stay with the trade out there. You keep stops in place and so forth, but this daily futures contract looks bullish to me. I don't see anything. I don't see a reason to exit the trade looking at the daily chart.
Yeah, because I got a stop in at 828. I'm thinking that looked pretty good as a point. If
828, yeah, so you're using the exact low of November 28th out there. Probably as good as anything. If you look, what you want to do each morning is just take a look at, before this equity futures contract, your regular trading hours, the UNG trades, is go see what's going on inside of the futures contract, and maybe look at a couple different time frames as well. Yeah. All right, my friend. Hey, thanks so much for calling. Listen, I'm sorry that we're out of time. I'd love to chat with you more, but the show is actually over. So, hey, have a great day, and thanks again for calling. That was Mike in Denver. Folks, stay tuned because it is Terrific Tuesday. Is it Tuesday or is it Wednesday? It's Wednesday. It's Prince Alberghetti Day. Bottle Amarone tonight. Take care, folks. We'll see you on Terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.